Hey guys, welcome to the Silver Report. Here we are. It's Monday, February 13th, 2017. We have gold currently trading at $1,226.90. Silver is trading at $17.91. And let's get into some of the economic news. The Chicago Board Options Exchange Volatility Index is extremely low right now. By comparison, the last time we started out a year with the volatility index so low, it was in 2007. That was right before the subprime mortgage crisis struck. Before that, it was in 1994, when hedge funds blew up. This is how it relates to you. Complacency. There's complacency among investors. The balance between supply and demand for options is one of the things that's measured by the volatility index. It's an imperfect proxy for the costs for protecting a portfolio that is in the S&P 500 against loss for the next 30 days. The problem, when it's this low, it's because there are a lot of people willing to sell insurance policies against a market crash, and very little buying protection. That means when it goes wrong, it's going to go very wrong because the entire market is poised to move at once. There's not a diversification among investors. I spoke briefly about the fact America's biggest creditors are suddenly changing their mind about financing the United States government. We see some major moves. Japan, the largest holder of treasuries, culled their stakes in December, the largest amount in 4 years. According to the most recent figures by the Ministry of Finance, it's not just the Japanese. Across the world, investors are pulling out of the United States debt. This has never happened before, not on this scale. Tokyo, Beijing, London. There's been a consensus, it seems, among these governments. No one wants to step into the $13.9 trillion United States Treasury market right now. Bigger deficits, more inflation, higher interest rates. Investors no longer consider the U.S. the world's safest debt market. Definitely not since the upswing in yields in November. Kenta Unye, chief strategist for overseas bond investments at Mitsubishi UFJ Morgan Stanley Securities in Tokyo, stated, Treasury yields may rise rapidly again in the near future, which will continue to discourage them from buying aggressively, unquote. So they expect the yields on the United States Treasury bonds to increase, meaning the risk of no gains is higher, making the United States a much more riskier place to own debt in. And when you consider our Federal Reserve notes, I suppose almost all of our citizens are holders of debt. Japan still owns about 43% of the United States debt market, even though that's down from 56% in 2008. They don't see returns in their numbers. In December, Japanese investors reduced investments by $21.3 billion. And that was following a smaller pullback in November, but this is the first back-to-back decline since 2014. China's been selling since May, with holdings at a 7-year low. So they are abandoning the U.S. Treasury debt market. They are predicting that yields are on an uptrend. They are predicting that the cost of lending to the United States is becoming riskier, too much. And they must protect their money by fleeing the U.S. market. That's what smart money is doing. Last quarter, they suffered a 4.7% loss. That's the largest in the last 3 decades. In 30 years, they suffered the largest loss just by holding U.S. Treasury bonds. It is a black hole of debt. And that's from the data the Bank of America was showing. And so what we're seeing is these countries are getting no returns. And yet the investors in the United States, they're so excited about this stock market rally when it comes to actual numbers and actual data, we see that there is massive losses. And worse than that, when we begin to see the yields rise in the United States, we're going to see investors begin to flee on a faster rate, and more people are not going to be interested in investing in the United States. And the real problem we have with that is the fact that this debt ceiling meetings they always have for fun, for show. The fact is they have to continuously raise the debt ceiling because we can't afford to pay back the interest on the massive volume of debt we already have. We can't afford to pay it back, so we must always print more money. We must always borrow more money. And for that, we must print more money if we don't have investors. We are going into a tailspin. We have been hit by a direct hit in 2008, which there is no recovery from. There's no recovery from. These other countries know it. That's why they're bleeding U.S. Treasury bonds. That's why no one is willing to buy them. And the real problem we're going to be facing is seeing how we still had more deficit spending in December, more deficit spending in January. And the problem we have, it seems great. We want to revive the United States economy. We want to do infrastructure spending, which all the economists they agree it's going to be great for the United States. It's great to have construction work. It's great to have jobs, to go and fix some of this infrastructure. They want to build this wall. It's going to be American made. They're going to want to build a wall. It's supposed to cost $21 billion. And they said Mexico was going to pay for it. Mexico's not going to pay for it. We're threatening to increase tariffs for trade with Mexico. Why in the world would they ever pay for this wall? They're not going to pay for it. We are going to pay for it. And so there's another thing. We have heard some things in speeches that security was going to reign. Security is going to reign during this administration. And while you may agree with this, you may think it's necessary, and it may be beneficial. In my opinion, sometimes security, depending on who's defining it and who's stating it, might not be a good thing. Might not be a good thing. Kind of like that JFK speech. The announced need for increased security will be seized upon by those that mean to expand its meaning. And so, increased security protocols, increased military spending. We're looking at a world that seems to have increased political difficulties, we'll call them, for now, until missiles begin to fire, until we're invading more countries. Until Iran, the sanctions don't work, and more countries begin to flee from the United States dollar. Until then we'll call it war. Maybe not. We'll call it Operation Freedom. Operation Freedom. And so we have not only these geopolitical risks, the abandonment of our allies. London is not buying our bonds either. It's not just those who we threaten, saying they're currency manipulators, because they are. And they are crushing us on trade. And they are robbing the wealth of this country and the jobs of this country. But the issue is, it's also our friends. It's everybody who can see the analytics. The writing is on the wall. And the trouble that we see taking place in the stock market right now is that there is extreme amount of enthusiasm, extreme amount of money floating into there, and it's the same story we've been hearing over and over again, and those that don't know history are doomed to repeat it over and over again. Excited over what? Over nothing. And it becomes this frenzy. The money goes in, then someone presses the panic button. They take their money out at all-time highs, and then the rest of the market suffers. They lose their money because they're never first. They're never first. What we're facing in this country is unprecedented. It is something that we have never seen before. It's interesting when you hear the people talking about this happens all the time. They've been saying it forever. This is something we have never seen before. There are no charts for the United States Treasury bond yields increasing and investors fleeing from the United States, and the US dollar being at such a mass money printing scale that the nations around the world are fleeing from it. We have never seen this before. We have never seen such increased credit risk among consumers. We have never seen defaults on such a rise and enthusiasm in the markets, except there was a massive stock market sell-off. We are in grave danger in this economy. And the fact that all they want to do is tell you how great everything is, that should make you sick. That should make you sick. But it's time to take steps now to protect yourself and protect your family. Not just silver, gold, food, and water. And I thank you guys so much for stopping by. If you like the content, be sure to subscribe, like the videos, share the videos, get the word out. We have to awaken the people. And I thank you guys all so much for coming by. And again, stay safe.